Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to take a look at Verizon out of the communications sector. It is July 17th. Let's jump right in the video. Now I will say it's not very often that I look at what's going on in the market and it's a clear-cut winner for what I'm going to do for the stock pick of the day. Usually I do a little bit of research before I put these together, look at a couple different stocks, see which one I want to go with. But this one, when I saw it drop today, I just had to jump on it. It is one I own. Full disclosure, we'll see my position here in a little bit. We are talking about Verizon Communications. If you want to know more about the company, www.verizon.com. That is their homepage where I pulled this information from. Verizon Communications was created on June 30th, 2000 by Bell Atlantic Corp and GTE Corp in one of the largest mergers in U.S. business history. GTE and Bell Atlantic evolved and grew through the decades of mergers, acquisitions, and divestitures. Today, Verizon is a global communications technology company delivering the promise of the digital world to millions of customers every day. And they pretty much have their hands in everything, right? You can go to their homepage again, check them out. Mobile plans, mobile devices, right? They have their stores where you can buy phones from them. Home services, I get my home internet through them because they were one of the first companies to come out with wireless technology, and I didn't want a bunch of wires around my house, so I have my internet connection through them. Small business and medium business, enterprise solutions, Verizon Connect, public sector, and partner solutions. So they not only service businesses, but also the individual. Again, I use them for my home internet. I think we use them for our phone, family phone plan as well. You may have Verizon or AT&T or one of the other services out there, but you're probably aware of the company. As many people have a cell phone now. It wasn't that big of a deal when I was a kid, but now even my kids have cell phones. So everyone pretty much has one. Communications is the name of their game, and communications not only over the airwaves, but also home internet and that sort of thing as well. Now over to why we are looking at them today. They were down 7.5% on the day. Huge drop on the day here, right? Anytime a company, especially one I own, drops that much, I'm going to take a look at it to see if maybe I am way out in left field on even why I'm in the company. They did close out the day at $31.46. We are talking about Verizon Communications, ticker VZ, out of the communications sector. Looks like they're slightly up in the after hours, but $31.46 at the close of business. 52-week range as low as $31.25, as high as $51.17. So they are right up against their 52-week low. Average volume 20.9 million. Today was 96, and it was just a sell-off, right? And not just Verizon, but I think several other companies. AT&T was another one that I saw that was down significantly today. So I'm sure the communications sector in general is down. There was some negative news around some issues with their existing wires, lines, and some lead. I'm sure they used lead at some point. Almost every company did back in the day whenever they were putting these lines up. I don't think it's as big of a deal like the Flint water crisis where the lead was in internal linings. I don't think people are drinking water through internet cables, but it would be an issue nonetheless if they have to go and take these wires down and put new ones up. There would be a cost associated, and that's kind of what the news and freak out is about today, I believe. Market cap of 132.258 billion. Beta of 0.35, so they are a lot less volatile than the overall market, at least except for today. Price to earnings PE ratio is $6.12 per share, very low in my opinion. Earnings per share EPS is $5.14 per share, very high for this type of company, again in my opinion. Earnings date July 25th, so that is coming up. We have an earnings date coming up here shortly. For dividend, $2.61 paid out in the year. We'll see what they pay quarterly here. They are a quarterly payer. We'll see that in a couple of slides. And a very, very nice dividend yield on this one, partly because of the big drop today, but 7.67%. If you are looking for a pretty safe, in my opinion, income play, this would be one, right? Ex-dividend date was July 7th. We just passed that. So you would not be in line for their next dividend payout unless you owned them the day before July 7th. But if you bought them now, the shares you bought now would not be in line for this next dividend. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information from, not affiliated, just one of the sources that I like to look at. They have a one-year target estimate of $43.48 per share. Now they have a payout ratio of 50.54%, so not a bad payout ratio, but let's look at under statistics. If you went down to dividend and splits, one of the areas I like to look at is dividend yield theory. It gives me a quick gauge of whether a company is undervalued. For this one, we go over and look at the 5-year dividend yield. 4.84%, which is nice. That's actually a really nice dividend yield on its own. But the current dividend yield of 7.67% being higher than their 5-year average speaks to some undervaluation here. And not only undervaluation, but a lot of undervaluation, right? At least according to dividend yield theory. Like I said, 50.54% payout ratio, so plenty of room to increase this dividend over time. If you were to buy them now, you would lock in that 7.67% dividend yield, which is, again, very high, very nice income play here on this one, in my opinion. And it's not really a fast grower. We'll see that here in a little bit, but you're not going to get a lot of stock appreciation in this one, but you would get a very nice dividend yield. Ex-dividend date, like we said, July 7th. Payout will be August 1st. Now, I want to go look under financials. Free cash flow is what we're looking for. We want growing free cash flow over time so that we get growing dividends over time. I will say overall, their free cash flow doesn't look great. 2019, $16.9 billion. 2020, it was $21.45 billion, so a big jump up there. 2021 in the negative overall. You'd have to look and see what's going on there. There was a charge off or something there because that's a big drop. It doesn't really make sense overall. But then back into the positive in 2022, $10.4 billion. And then we'll have to see what they do in 2023. And apologize for the noise in the background. Someone must be cutting some trees down. My neighbors, there is that big whine that you're hearing, if you can hear it. I'm not sure, but it is annoying to me. But if you look at one of the things, this usually is whether or not they're issuing shares or buying back shares. They are not, but they are repaying their debt. You can see that here. And a lot of this jump around in free cash flow looks to be around how they're paying back their debt. You can see 16.9, but a big charge off or pay down in their debt that year as well. So lower free cash flow, but they are big chunk in paying off debt. Same thing in 2020, less paid towards debt, but a bigger free cash flow. So that might be part of it. And then this one overall, again, I'd have to look at what went on in 2021. That is a huge, not only did they pay down a bunch of debt, but they had a big write-off or something, because that's in the negative, extremely a large amount in the negative. And then still paying off debt in 2022. So just a quick bonus there. I don't typically cover that, but that was there, so I thought I'd capture it. Now, I always recommend more than one source for information so you can back check the information you are getting is accurate. Another one that I like is stockanalysis.com. Again, I'm not affiliated. Just make sure that you are looking. You pick any choices of sources that you want. Just make sure you're picking a couple, 2, 3, so that you can back check the information and make sure the information is accurate. Now, according to the 17 stock analysts that they've had to take a look at this, they call it a consensus hold. I'll be honest, I'm buying, right? I'm buying right now. It's down a lot, and I am lowering my cost basis on this one. It's really presenting a lot of value, in my opinion, at least according to dividend yield theory. And I'm going to lock in that high dividend payout and reduce my cost basis on this one and continue to do so long as it shows value the way it is. But they call it a consensus hold. According to the 17 stock analysts they've had to take a look at it, they have a low estimate of $37. It's much lower than that at $31.46 currently, which would be, if it came back up to their low estimate, a 17.61% increase in the stock price. An average estimate of $44.24, which would be a 40.62% increase in stock price. And this is pretty much in line with what we saw at Yahoo Finance on the previous page. A high estimate of $64, which would be a 103.43% increase in the stock price. And I want to show you something here just before we get on this. It's not often that even the lowest estimate shows over 10% appreciation of stock price, let alone 17%. So they, even though they're calling it a consensus hold, they, according to their own estimates, at least up until June 5th, that's whenever their last price targets were last updated on June 5th here, so I captured that too for you. At least according to June 5th, their estimate there, this is currently lower than their lowest estimate. So again, I feel perfectly comfortable backing up the truck and adding here, full disclosure, I added some more today. You'll see what else I bought on my updates on Sunday morning, but I did buy some more Verizon today. I mean, I just looked at in the $31 range I'm buying. That's just where I'm at. Now, a lot of the same information, financials, you can go in there, look at their balance sheet, look at their income statements. You can look at their revenue. All that information is found under financials. Statistics is what we're going to look at for return on equity and return on invested capital. This is their forecast, and dividends we'll look on the next page. But the same information you can get from Yahoo Finance, just showed in a different manner. I like this projection here. That's part of the reason I like stockanalysis.com. But let's jump over under statistics. One of the other ones I like to look at, return on equity, ROE, and return on invested capital, ROIC. I like 10% or better, and this smashes both of those numbers. Return on equity, ROE, 24.2%, so more than double what I like. Return on invested capital, ROIC, I like 10% or better. It's at 10.40. So far, based on all the numbers, except for maybe free cash flow, which I'd have to look at what was going on in 2021, why they had a big charge or negative free cash flow there. Other than that, all the numbers, in my opinion, look very good on this one. Price to earnings, very low. Return on equity, return on invested capital, very high, below their lowest cost estimates. But let's keep on going here. Now, again, payout ratio 50.68, so plenty of room to increase the dividend over time, pay down debt, deal with whatever issues they have according to the news today. Do not have very high dividend growth, but it is growing. They are growing their dividend. Even though it's a 7+% dividend yield right now, they are still growing at 1.95%. I can handle a 7.5% dividend yield growing at 2% a year. I'm fine with that. I went back to 2022, 64 cents back in January 2022, and they raised it up in October of 2022 to 65 cents and some fractions of a penny. That's where they've been ever since. So I would say if they're going to raise it again, it will be in this October time frame, still running the 65 cents and some change, fractions of a penny there, this payout in July, but I would expect them to raise it in October and be in line with the around 1-2% dividend growth again. We will see, but that's what I'm expecting. Again, I am long Verizon Communication. Here's my position at the bottom. I do have 270.788 shares. My cost basis is actually $42.42. Obviously, I am down a significant amount, down 25.85 or 84%. So down a big chunk here, even down more, $690 on the day. So down $2,967.87, or again, 25.84%. I do have $11,486 into this, and it's currently worth $8,518. So I am down, but I'm continuing to buy. I do like the high yield on this one. I know it's a slow grower. I'm fine with that. It is an income play for me. It may not fit your criteria if you're looking for something that's really going to grow over the next, 5 to 10 years. This is probably not for you, but for you older investors like myself in your 40s, 50s, even 60s, this one here, in my opinion, is a very good, safe income play, right? 50.68% payout ratio with a 7+ dividend yield. Overall, for me, it's still a buy. I'm going to continue to add to this. I'll probably run up to, over 300 shares, maybe 350 shares, and then back off a little bit. But for this one, as long as it stays under $35, I'm buying. That's just where I'm at with this one. Let me know in the comment section down below what you think. Do you have Verizon Communications in your portfolio? Are you avoiding it altogether, especially with the news out there right now? I wouldn't be mad at you if that's what you were doing. This is the Vested Interest Stock Screener. This is how I look at the videos overall, plus how I look at companies. Gives you an idea why I set the videos up the way I do. Go ahead and pause this and run this through at your leisure. We're getting a little long in this one, so I want to wrap it up. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this one, our opinions on them, why we're avoiding them, why we're buying them, mistakes we've made in the past, tips and tricks we've learned along the way. We can all learn from each other as investors. You can't benefit from my investments, but you can certainly benefit from the experiences and even the mistakes that I have made over time, and I will share those with you on this channel. That is what it's all about. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like Verizon Wireless you would like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below and let me know what you think of the video. With that said, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and money. You should never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice of counsel by a certified financial advisor.